Jack Dorsey causing a major stir on Twitter today, taking aim at Web3 and the Metaverse and warning investors it might not be all that it's cracked up to be. The former Twitter CEO tweeting, "You don't own Web3, the VCs and their LPs do. It will never escape their incentives." The tweet getting a lot of likes, but also a lot of pushback, notably from Corey Dixon of venture capital firm A16Z, who said, "I am a huge fan of Jack and hope we can eventually bring him around to ETH and other blockchains." For more on the saga of Web3 and the decentralized internet, the opportunity that may lie there, let's bring in Jefferies technology analyst Brent Thill. Brent, good to have you with us. What do you make of the criticism?
I think Jack's right. I think, look, the hype around Web3 is so huge in our industry. The metaverse is coming up in every transcript of every tech company we cover. And so ultimately, I side with Jack that I think the hype is probably a little ahead of the time. Again, this is going to take 3 to 5 years to play out. But on to back what the VCs are saying, Twitter hasn't exactly been super innovative. When you look at the innovation that's going on in Snap and in Facebook, for example, incredible innovation. In Twitter really hasn't seen it, and it led obviously to a change in the senior management team. So I think ultimately this is a 3 to 5 year journey. We're at the beginning of it. There's real excitement. There's going to be some really cool companies come out of the private world, but I do think the hype is a little bit ahead. And there's some great, public stories to own right now that can bridge the gap between where we're at in the internet today to the next generation, wherever we end up. We have a handful of names that we like at the firm.
At Jefferies, you're part of a team that covers the opportunities in the metaverse. And I'm wondering, if in the team's estimation, there is metaverse fluff in any valuations, or have investors been smart enough to know that this is an opportunity that is way out and maybe should not be priced in yet? Or do you think it should be priced in right now?
I don't think there's a lot of fluff in current names right now. So take example, Adobe, Snap, Facebook, NVIDIA. I think many of these names are actually fairly reasonably valued. So I don't think there's a lot in them. Should there be? Over time, I think there should be. If you look at a name like Adobe, when Steve Jobs was alive, he was bashing Adobe Flash. Everyone thought Adobe was dead at $30, and the stock has had a tremendous run. They have created this version of the internet. We think Adobe will be part of creating the next generation of whatever the internet looks like 3 to 5 years. So that's a great name that we don't believe is overvalued. That's had a recent haircut that we'd be buying on this pullback.
Hey, Brent, first things first, aren't we confusing a couple things here? So Chris Dixon is not talking about the metaverse. He's talking about decentralized platforms. He's talking about creators being to monetize their data, right, in a decentralized sort of fashion using tokens and different incentive structures, that sort of thing. So to me, I don't think this has much to do with the metaverse and what Adobe and some of these centralized platforms. I think Jack's criticism is kind of interesting coming from a guy who obviously founded a very centralized social media company and now runs, obviously founded Square, Block, or whatever the heck it's called, a very centralized for a peer-to-peer payment sort of thing. Aren't we kind of confusing a couple different things here?
Well, I think there's a lot of definitions of what this is going to look like, what the next generation of the web, internet, metaverse is going to look like. And again, I think our view is a lot of these companies that are existing are going to be part of that fabric of creating this next generation. I don't think we go completely decentralized. I think if you look at the internet, look at the walled gardens. Who's really taken on Facebook, Google, Amazon, a handful of these? Not that many, right? There's a handful of stories, and the rest have not mattered. So ultimately, I don't believe, again, there's going to be a current generation of companies that's going to control this. We think many of these names in the existing industry will control. And yeah, there's going to be some great success stories that come out of this, but I don't believe, again, they're going to be as many as the VCs are touting.
Hey, Brent, it's Tim. So again, just getting into the theory here, because I think it's important for investors, and especially the folks watching this show, to understand what the differences are. And again, one of the criticisms is this is just 2.0 with a different label. I'll go at it from the monetization side. Do you think in a world that we are more decentralized, and at least theoretically, that's a place that actually may be more consumer advantageous, are the same players, or, again, I know you talked about companies that may be part of that next wave. I worry that the monetization of 3.0 is a totally different space, in that inherent in that is less monetization, and that's good for consumers.
Perhaps. I think ultimately, again, when you look at, again, Snap is a place we went to visit, and ultimately I think it's going to be a place we're going to actually transact and exchange goods, whether it's NFTs, whether we try and clothing from Polo Ralph Lauren, pay them direct in a direct consumer relationship. I think today it's largely a communication platform for the younger audience to use. I think that shifts, and so I think ultimately a lot of these platforms we cover are morphing and adapting to that. And is there suddenly going to be 30 companies that are born out of this that are going to be incredible? They're going to be great stories, but I think a lot of the existing stories are already going to be part of this. So I'm taking, again, the view of a lot of the existing stories are going to stay with us and capture this next generation from what we can see so far. It sounds,
I mean, with the Snap example, Brian, it sounds almost like you think that a lot of, or at least the notion that we have of Web3 right now and what the metaverse could shape up to be is sort of a convergence of what these companies will offer. I mean, if Snap is going to ultimately be a place where you exchange goods and Nike is going into the metaverse to trade goods as well, I mean, that seems like it's transactional. Like the metaverse is going to be transactional, whether it be for services like gambling or for goods like NFTs.
Yeah, I think that's right. I think, look, there's multiple angles on this. There's software, there's semis, there's payments, there's numerous ways to own this transition, whatever your definition is. And there's so many different definitions of what this is going to look like. We think there's going to be winners out of each of those categories. And so what we're trying to identify across our tech team, across each of those sectors, is who's going to win. NVIDIA and semis, Facebook and Snap and the platforms to visit, Adobe and creating those worlds in Unity, which creates the software to build. There's obviously going to be a whole host of financial and payment providers, including Shopify, which is, again, dominating a lot of the social platforms already. With 2 clicks, you can have anything you want to buy through Shopify. So I look at it as, yeah, there's going to be some interesting enabling technology to come out of these VCs in the private world, but many of these companies are already servicing. And again, I just go back to the same example of Adobe. As we've shifted from the old internet to the new internet, they were part of that. Whatever your definition of this is, I think a lot of these companies are going to be along and be part of it.
Brent, great to have you. Thank you. Brent Thill of Jefferies. I don't think we as a group, I certainly haven't thought of Adobe as a potential Web3 play guy. I don't know how you think about Web3, or if you think about it at all. I'm still trying to deal with web without the number on the back of it. So no, just web. I mean, you should ask Dan this question. I mean, you want to ask me who was on the gag line or the French Connection and for the Buffalo Sabres in the 70s? I'll talk all day. But NFTs and Web3 and Metaverse, that's outside of my scope. All right, Jeff, I'll go to you because you actually have members of your household on Roblox. So you have maybe a good grip on the metaverse at this point. How do you think about in terms of an opportunity, an investable opportunity today?
Yeah, I do, and I've seen what's going on with Roblox. I've actually bought it for my daughter's brokerage account, so definitely getting involved there. But I think for the average investor, there are ways to bet on Web3 and the metaverse without, betting the farm on some sort of like obscure token. So think about a name like EA. I mentioned it Friday, but EA gaming content creation, and I think it's a stock that's set up pretty good right now.